When I first started my investment journey, I was excited by the potential. Over time, putting together a diversified portfolio of stocks, some gold, and I even invested in a small property for some rental income. But is that typical of women investors? And how do we stack up against the men? Well, I'm about to find out. Research seems to indicate that women investors outperform men when it comes to the strategy that they're taking. What factors do you think it is that contribute to that kind of outperformance?
I think women tend to be a little bit more cautious when they want to go into investments. So they do study before they go in, they seek advice. And clearly when they are thinking about investments, they are very thoughtful and think about things in a much more longer term perspectives. And very often as well, we see that they are thinking about this in terms of understanding what is this investment for? What are my investment objectives? And very often we realize that they actually think about this with their family objectives in mind, what they are hoping to achieve with these investments. And sometimes you will see that family features quite a high weightage, right? Many of them will be saying that, okay, I want to think about this pile of money becoming a startup fund, for each of my children. So they'll think about it very thoughtfully and deliberately. Now, because they do that, they are very thoughtful and they prefer to do more of a buy and hold kind of strategy. And as such, they go into very diversified, well-planned, well-balanced portfolios. And these portfolios really help to weather short-term volatility.
All those years ago when it was new to me, this idea of splitting up your portfolio was new and a fascinating sort of journey. Is there a specific sort of breakdown that the average female investor should consider when it comes to building up their portfolio for the first time?
One of the things which many people do not know is that actually asset allocation determines more than 70% of your long-term returns. So that's actually even more critical than knowing what kind of stock is a better one to purchase. So I would say going to an advisor is always best. Speak to somebody and be very open around what your objectives are, what your own risk appetite is going to be, and let that person help to design a portfolio that suits you. And it doesn't matter even if it's simple. Get something started, and along the way you can tweak. If there are certain things that you like a little bit more, you can overweight those positions or go underweight on certain areas that you don't like it. And it should be something that you are very comfortable with over time.
Sansan, is there any one type of behavior that women investors should perhaps avoid when it comes to putting together their portfolio?
We actually see a tendency for women investors to hold a little bit too much of their wealth in cash and deposits. That's something in which we would really encourage them to think more into investing, putting their monies to work harder for them through diversified portfolios, as we were mentioning. Putting too much of your wealth into cash and deposits clearly, erodes over time with inflation.
And these are lessons all of us, regardless of gender, can learn from.
I think female investors in general have very good characteristics that all investors can learn from. One is goal-based investing, that they have a certain goal in mind and they have a pre-structured way of investing, whether it's setting aside money for cash, setting aside money for long-term investing. It is really a goal-based investing as opposed to generating the highest return. The second thing is following discipline, and instead of getting, tempted into trading and take the money out and putting it in cryptocurrency or something more active, I think staying disciplined is the second part. And the third part is long-term investing. The idea, and they're all related, the 3 points that I mentioned, but the long-term investing, our data suggests that female investors have lower churn and lower redemptions. I think, again, letting the market, the time do the work, as opposed to me trying to generate the returns are the three traits that I would advise.
At FinTech Endowus, the number of women investors using its platform
has doubled in the last 5 years. 40% of its clients are now female investors.
So we have created balanced portfolios that depending on your risk appetite, invest in predetermined funds. And it's interesting, the female investors have a very high take rate of this balanced portfolio. It's really a combination of what we call systematic, passive, and active funds. And it's really our own best expression of having a volatility adjusted return that tracks the market portfolios. But we're also seeing investors become more active in our what we call our Fund Smart platform, which is them investing directly or them selecting their own funds. So this is an interesting sign because in the beginning, female investors in general had a lack of confidence in their own ability to invest. So this is a good sign. We are seeing evidence that female investors are more active in using our platform, which is generally a good thing because they're taking more, I guess, proactiveness in thinking about their long-term investments.